Welcome to my weekly real estate market update. I hope you're having a great week. Lots to unpack this week in the land of real estate. And firstly, I want to focus on one article that Eliza Owen from CoreLogic wrote. And she noted that Brisbane average dwelling prices outpaced that of Melbourne, $787,000 compared to $780,000. So only slightly, and this is the first time since 2009. One reason for that is generally the Melbourne market is fairly unit dominant, and that means they sell more units and have more units generally, and unit prices or values are lesser than detached houses. So that skews that figure a bit as well. But another reason for it is because of the pandemic. During that pandemic period, a lot of people migrated from those southern markets to the beautiful lifestyle destination of Queensland. They saw in Victoria a 20,000 population decrease in up to March 2022. Whilst Queensland saw a growth of 51,000 people. So that's certainly pushing a lot more demand into an already undersupplied market up here. So interesting article there by Eliza Owen from CoreLogic. We also saw this week that they reported that 3 times in the last decade that rental prices and growth has outpaced that of property values. And that occurred in 2018 and again in 2022 and 2023. That indicates to me there's a lot more demand obviously getting pushed into the rental market and a clear undersupply of availability. We know migration numbers are through the roof, and that's obviously pushing a lot more demand into that rental sector as well. But I believe another key reason is the affordability issue. A lot of buyers are just moving away from purchasing because it's just unaffordable. So they're getting pushed into the rental market as well, pushing the demand up there, and that's why we're seeing rental fees outpace property growth. Property growth has slowed a little bit. There is still buyers showing a lot of caution, and that has caused the time on the market, or the average time to sell a home or a property, increase. Now it's on national averages around 29 days. Regional areas slightly higher at 41 days. If we compare that to the likes of Woombye and Palmwoods on the Sunshine Coast, sitting around 40 days. So a little bit longer to sell a property in the regional areas. A reason for that is obviously buyers are taking a little bit of caution before making a decision to purchase because prices are up there. We've also seen an undersupply as well, so there's less to choose from generally, and that can sometimes cause time on the market to be a little bit longer. What we have seen, which was interesting and reported I think by CoreLogic as well, is that vendor discounting reduced in the last quarter from 4.5% to 3.5%. So that's basically what it's saying is what sellers are reducing their prices by or negotiating on their expectations by to the end sale result as well. So 3.5%. So that's declined, which indicates to me that there is less supply in the market and sellers are able to hold more firmly to their price expectations. And I think that's going to continue forward. Now, the big thing that everyone's waiting for, buyers and sellers and myself, is what the RBA will do in their first meeting this year in February on the 6th. NAB this week adjusted its forecast, suggesting that the RBA will hold the cash rate. Now, all the big 4 banks are now saying that the RBA will hold the cash rate, and most of them are saying there will be 1 to 3 rate cuts this year. With Westpac, I think, or CBA, suggesting there will be a rate cut as early as September. Now, I know a lot of buyers are probably holding off, waiting for that rate cut because that increases borrowing capacity. But what it'll also do, if that rate cut does happen later this year, it may cause a little frenzy in buyer activity, and that could cause a little mini boom as well. And I really think that's very possible. So right now, there's a lack of property available for sale, so good opportunity for sellers, less competition, but also a great opportunity for buyers to get into that market before that cash rate potentially does drop and the competition in the buyer sector increases. So guys, interesting market, and it'll be an interesting one to watch this year. If you need anything real estate related, anything at all, please give us a call. We'd love to help you.